The foreign exchange market is known as the Forex Market, currency trading market, or just FX. It is a market where participants buy, sell, and exchange currencies. It facilitates the trade of trillions of dollars worth of transactions every day. There is no central location. Instead, money is traded through a network of international dealers and brokers. Businesses use the Forex market when they're buying products from other countries. For example, suppose a U.S. company wants to buy a car engine from the U.K. The engine is transferred from the U.K. to the U.S., and the U.S. company has to convert U.S. dollars to pounds to pay for the good. The U.S. company uses the Forex market to convert dollars to pounds at the current exchange rate. Speculators will attempt to buy currencies that they think will increase in value and sell currencies they think will decrease in value. Unlike a stock, currency valuation is relative to other currencies, and that's why the price is given in relation to a second currency. There are many factors that contribute to a change in exchange rate, including monetary policy, political stability, interest rates, and imports and exports, to name a few.